Alright, yes guys, welcome to the New York AM session breakdown for the day of Monday on the 21st of April. So taking a look at price today, I actually didn't take any trades and I'm going to discuss with you guys in this video my overall thought process going into the AM session today. This type of video was requested by many of you inside of the comment section on the previous video of doing trade recaps and also overall breakdowns, whether I took a trade or a loss inside of that session. So going forward, I'm going to put out as many of these as possible, as I do think it's going to provide a lot of value to you guys. So going into the AM session, I've just used the replay tool on TradingView here and I was unable to do it on ES. So this is the New York Open on ES and I'm on the 4-hour time frame on NQ as of now. So going in towards the AM session, I seen that we had a clean draw for previous week low, which had already been swept on Wednesday at 2 p.m, which was created the previous week. We've taken out previous week low. If you look on the 4-hour time frame as of now, the overall draw on liquidity was previous week low after we actually inversed this 4-hour bullish gap. So once this got inversed, the overall draw is definitely going to be previous week low. So now we've taken out previous week low for price. Now I expect a draw higher out of this 4-hour bullish gap and for price to give us a clean draw to say London highs or previous day high. So going into the AM session, I had more of an overall bullish bias on the 4-hour time frame, and now I'm going to show you guys the difference in time frames here, which led me towards a neutral bias. So taking a look at the 30-minute time frame as of now, you can see we're inside of a 30-minute bearish gap, which is currently getting respected. It's been respected prior, it's been respected prior, so on and so forth. So currently we are in very clear bearish order flow and no signs of bullish momentum at all. So in order to actually look for longs in this scenario, I'd like to see an inverse of a 5, 15-minute or a 30-minute bearish fair value gap for a clear shift in market structure towards bullish and then look for a lower time frame entry. We've swept previous week low, we've tapped the 4-hour bullish gap, and if you take a look at ES as well, so let's jump on the 4-hour. So at this point you can also see ES took previous week low many hours before NQ actually did. And then if you actually jump down towards the 15-minute time frame, you can see we're actually in a 15-minute bearish uni, which is a major confluence for price to draw lower. This specific green candle here, the wick actually tapped the bearish breaker, and our bearish breaker is going to be this entire red candle, and the wick's low of this red candle, you can see on the 15-minute, it tapped it algorithmically, it tapped it by a couple ticks inside of this 15-minute bearish gap, and then we've seen price react to it quite sharply. I expect this 15-minute bearish to get respected. Am I looking for shorts out of this for a continuation? The answer for that is no. We're swept previous week low. I understand on the 4-hour that the next 4 hours likely to draw higher. However, taking a look at the 15-minute time frame, you can understand that the next 15-minute candle is likely to draw lower out of this 15-minute bearish breaker, fair value gap, and sweep of liquidity of that point of minor buy side. So paired with this sweep of liquidity, we can clearly see that we've actually respected this 15-minute bearish fair value gap, which is also a 30-minute. It's been respected. We've then displaced lower again, shifting market structure after taking out that short-term high. Then we have a bearish break on the 15-minute, which got respected. So every bearish PD rate as of now going into the morning is being respected on the lower time frame, and then on the higher time frame on the 4-hour, it appears to be overall bullish. Therefore, I approach with more of a neutral bias. And then if you drop down to the 5-minute time frame, you can see there's not really a way you can determine where the next 5 minutes are likely to draw to. It's not a very clear draw on liquidity. So dropping down to the 1-minute time frame, let's take a look at the New York Open and understand if we get anything as of interest. Other points of sell side that I'd actually look to mark out would be this major point of sell side where we have the remaining part of the 4-hour bearish fair value gap resting below. So I'd look to mark that out as well, whether price wants to draw lower towards this area, and then for the second day macro we could look for longs from that area. That is another possibility, so I'm going to mark that out. And now let's fast forward price. Okay, as you can see here, we've just taken out minor buy side. We've tapped the 15-minute bearish breaker and the 15-minute fair value gap to the left. That has then obviously been respected, and then we've also seen price inverse these two bullish PD rays. So two fair value gaps have now been inversed, and then we've created this bearish gap. However, no displacement as of now, and we're also not inside of macro. Okay, so inside of macro, you can see we create this bullish gap, and for an I fully gap play, for those of you that do trade I fully gaps, this would be a continuation I fully gap play for shorts, and you'd simply enter short on this candle closure. Is this a model that I trade? No. Is this a trade that I would take? No. However, this is a model that some people do trade. I just tend to not trade it myself. First presented gap inside of the New York session is something that you would look to mark out all of the time. And also this unfilled 1 minute bearish Fibonacci gap. You can see both these bearish gaps are currently getting respected, paired with the I Fibonacci gap to the left. We have then obviously drawn lower. We took the short-term low. At this point, I was honestly looking for price to cleanly inverse these two bearish gaps and then see if we get an opportunity for longs, and then see the 15-minute bearish gap and bearish breaker to the left get disrespected, and then we can look for longs towards our clean set of London highs, which is at 2:05 a.m. So the London session is between 2 a.m. and 5 a.m. So as you can see here, there is currently nothing within my model that I would look to take inside of this macro, and the macro ends at 10:15. So as of now, we've taken that point of sell side just outside of the first day of macro and tapped that 4-hour bullish gap resting below. Price as expectedly consolidated around this area. However, we're currently outside of macro and there is no clean setups here to take. The next macro is at 10:45. So going into the 10:45 a.m. macro, there is actually no clean setups still to take. We've traded back into a 15-minute bearish gap. We did not trade into the unfilled 30-minute bearish gap. And then simply on the lower time frame, there is no possible entries to actually take here. And as you guys will see, the rest of this second day macro was very, very boring indeed, and simply no trades. So that is the end of the second day macro, simply no trades there. And then inside of that first day macro, there was no valid opportunity for me to take, whether it's shorts or longs. There was nothing valid here for me to take personally. If you guys enjoy these type of breakdown videos, whether I take a trade and it'll be a trade recap, whether it's a win or a loss, then I'm going to be releasing these every single day. If you found it useful, make sure to drop a like on this video to let me know that you actually found it useful, and drop a comment as well for any questions that you guys do have, because I release other videos on this channel which answer you guys' questions in a lot of depth on a frequent basis. And on that note, guys, I'll speak to everyone inside of the AM session tomorrow. Take it easy.